Welcome back to the Mortgage People podcast. As always, I'm Sean Humphries with my best co-host in the world, Vaughan Zawadzki. We are going to chat about all sorts of things that happened over the last few weeks since we've been away, including the Liberal government fallout, what it means for mortgage rates. The unemployment rates came out this morning, and we're going to talk a little bit about rental prices as well and what we're thinking might happen with some investment. Let's cue the theme music and let's go. Vaughan, how's it going, buddy?
Is it too late now, January 10th, to say Happy New Year? Curb your enthusiasm. Larry David would say, after Jan 7th, forget it. But Happy New Year, buddy.
Yeah, Happy New Year. I think I'm out of it. I'm not saying that in all my emails anymore. I'm saying I don't know what's next. Easter, I guess, is coming up.
Let's get fired up.
Well,
yeah. Well, Easter is way out. April 21st or something this year. So it's a long.
It's too far.
Yeah.
It's too far.
Yeah, there's hopefully no snow on the ground by then.
Hopefully not. I mean, biggest news of the day or the week or even maybe the year is we're going to have a new prime minister in 2025.
Yeah, well, we're going to have a new one anyway and a new government. What a kick in the downstairs for Canada, for prime minister after 10 years of mostly failures. I think for him to say, hey, I'm going to step down after we pay everybody 3 months not to work, and then hopefully if we find a new leader, I'll step down. There was a condition there that if there's a new leader for the Liberal Party, he'll step down. But it also means that we're frozen, that we can't have an election until this happens. So what a waste of taxpayer dollars here. I don't think there's much to be happy about. Everybody who celebrated, I think that you're probably celebrating too early.
I think I see it as probably more positivity. I see a bit of a silver lining in this. I think the government since September has been kind of frozen. A lot of non-confidence votes, a lot of talk about, what is this government doing, and not really being able to get it across the finish line to be able to get the other parties have not been able to force Trudeau out. It's really happened within his own party to get him out the door. And I think proroguing the government is a feature. It's not a bug. I think that let's get this guy out. Let's move forward. If this was another country, we might have to wait a specific amount of time to get a new leader. But the Canadian community and country has spoken, and it's time for Trudeau to move on. After 10 years, it'd be time for any government to move on.
I would have lost the bet if the bet was that Trudeau is going to step down. I would have said no. Typically the hubris and the egos really get a hold of these people. So definitely the right move. I don't think it will save the Liberal Party from the next election. I think that one's already written in stone of a conservative majority. But you never know. It's definitely. His party, wanted him out, and it's the only chance that the Liberal Party would have in the next election. I don't think it's enough. What do you think?
Yeah, I have a hard time believing that the Liberal Party can make a big turnaround. I don't think that Trudeau is the sole reason that people don't that people want a new government. I think he's the lightning rod for all the criticism. I think he's comes across very I don't know if arrogant is the right word, because I don't think he's necessarily arrogant. He's definitely sure of himself. But I think that the world has moved on in the last 10 years when Trudeau came in as the sunny days prime minister. I just think that we're not there anymore, but he's really the same guy that he was.
Look, he probably did as good as a high school drama teacher could do running a 40 million person country, right? So if there's a finger to point, you're going to have to point it right in the mirror at anybody who voted for this guy and continued to vote for him, knowing that he was a high school drama teacher. I don't like what did we really expect? He got up there on
Yeah.
stage with the tears over and over again. Brought in new paid stat holidays for bankers and government employees, and the
Which one are you talking about? Like, what
the
government
the
holiday?
Truth and Reconciliation Day. I remember when,
So we
and
shouldn't. I think you're treading into dangerous territory there, because I
how
think
so?
like, well, I think that he's done a lot to for reconciliation of the Indigenous community. I think like over the history of Canada, we've really not treated them that well,
Oh,
and
and look, I'm
and
pro. You're cutting
we
out there.
have like we have St. Patrick's Day, and we have
Well,
like
that's not a paid holiday for government employees and bankers only, exclusively. This is all I'm saying is that, like the heart is in the right place. Um, the support for our indigenous communities in the right place. But the first year he did it, he took his family on a vacation to Tofino, instead of doing something maybe more memorable like meeting with indigenous leaders. It's
yeah,
embarrassment
there's
after
no doubt.
embarrassment for this guy. Uh,
Yeah. He's managed to
so
step
long
in
farewell.
so many like unbelievable at stepping in controversies, like just like unaware of his actions, and like, oh, this would be a good idea, but not really thinking the whole thing through.
This is what I'm saying. If you're going to
At the
introduce
end
a
of the day,
national
like he
holiday with
has to have people.
Sorry,
Yeah, he
if you're
has
going
to
to
have
introduce a
people
national
around him
holiday
that
with
have to
with,
be
with
saying
so
that.
much meaning, and
Yeah,
something then be there and be present, especially on the first year of the thing. It's not for you to take your family on vacation. If it's St. Patrick's Day, sure, yeah, go to the pub. If you're going to make
right.
that a national holiday, this has more meaning. He floundered it. He's dropped the ball over and over
Definitely.
again.
I don't think we've ever had a prime minister that has been able to get himself into his own trouble on his own doing, quite like Justin Trudeau has done. Like he
Absolutely.
creates these scenarios for himself. And if I think about like, well, how so I put Justin Trudeau aside, and I don't love to get political in my own personal life. So maybe I'm treading a little bit into uncharted waters here. But if I think about the person that could get the ideals that I like, which is a centrist point of view, elected, Justin Trudeau was that guy at that time, trying to find a leader to be the leader of the um, liberal government is difficult to find a leader at all. Conservatives have struck gold with Pierre Poilievre, who's like resonating with people, but they've had a series of leaders that have not worked out. And now what? Right. And now you've got somebody, you're going to run with it. 5 years from now, maybe we've got a liberal leader who's in place that can challenge him. But
That
I
could
just think
happen.
that,
I mean, I look at all this polarization, and I feel like it's truly not Canadian. We've been a very respectful country, I think, over the years to our various leaders, and Stephen Harper's time ran out. He was quite popular
yeah,
for two elections, and at the end of it, Canada had decidedly moved on from him. Um, and that's sort of around where the controversy kind of started within our country. Um, I don't have
you think
high
that's where it
expectations.
started?
I mean, it was around that time, around
Yeah.
the end of the Harper administration. I mean, when Trump was elected in 2016, that really kicked off a new playbook. I would say a new
Hmm.
political playbook. More division between the two parties. And Canada's typically been center right, center left, back and forth.
Yeah.
Not a very far swinging pendulum. And now it seems
Yeah.
that we're going into a farther swinging one. My hope is that we just learn our lesson from this, because I don't think that the next administration in Canada is the long term solution for this country. And I will say this: 1971, The Who released an album called Who's Next? I think it was track 8 or 9 on that, was "We won't get fooled again." And people haven't
Yeah,
been listening to that. And it shows when I see the excitement of people thinking that the next guy is going to be the savior, and getting rid of this guy is going to solve all our problems. We're doing that in North America, in Canada and the US. Everybody's getting excited. I think that you need to go back and listen to that Who
for
track,
sure.
and remind yourself that we are the solution, the people, not the government.
I think that that's exactly my point, is that we've got um, I think any government expires, any leader expires. Everybody was very sick of Harper at that time for a good reason. And people are sick of Trudeau for a good reason. They were both in power for 10 years, like in that time frame,
Yeah,
around 10 years of power. And any government is going to get stale
gonna
at
overstay
that
your
point.
welcome for
But
sure.
that doesn't mean that the next party is all of a sudden going to fix everything. It's just a new flavor of your politics. And will all of a sudden Trump come in power and lower everybody's grocery prices? Absolutely not. But that's what the next group is running on, and that's what that's what Trump's running on. That's what Polyev is running on. This idea that the government has messed it up and we're gonna fix it. And
Yeah,
that's the playbook every single time. The government has messed it up. We're going to fix it.
yeah.
And when
The
Polyev and
new
the
government is
conservatives.
gonna fix the problems of the old government. Give me a break.
Exactly. Exactly. And so like to think like, for example, like the government, the dollar, the Canadian dollar dropped below 70 cents in the last few weeks.
Well,
Is that because of Trudeau?
with that announcement, the certainty in the Canadian government, and over the last few weeks, right, with the finance minister resigning, and the Liberal Party wanting Justin Trudeau, their leader, out, that's uncertainty, and uncertainty means less investment in the short term anyway, less investment in Canada. The dollar drops. We've got problems. We need some stability, and perhaps with a new government, specifically being a conservative government, and having a conservative government in the U.S., maybe that sort of heals some of the relationship. Although I definitely wouldn't guarantee it against, like, there's a loose cannon running the show in our neighbors to the south, and
Yeah.
the stable genius down there. I'm not so sure a conservative government in Canada is going to smooth things out. Um,
Yeah, I think that it has more to do so if you were to compare uncertainty in Canada versus uncertainty in the US, like there's no comparison. There is so much uncertainty when it comes to what is this guy going to do in the US. The fact that we're transitioning to a new leader, sure, that is political uncertainty, but it's still a fairly similar flavor of what we currently have now. It's not like we're going vanilla to chocolate. We're going vanilla to French vanilla at
yeah,
this
or
point,
maybe a
you
swirl.
know?
Yeah.
Maybe some caramel in there. But like, so I really don't see like that idea that, oh, it's so uncertain here and that's why the dollar dropped below 70 cents. I think it's that the US economy is still going very strong. We're getting more investment into the US versus into Canada. Because if you compare like similar sized economies, resource economies, Canada to Australia, our dollar has been fairly even against them. If you compare against Russia, Brazil, Norway, which are all resource rich countries, Canada's dollar has fared better than those.
Right.
So I still think like we're just within the whirlwind of the US. We're going to move up and down, but I just don't see like a new leader or a change of leader having that much of an effect on our dollar.
Well, I mean, if we become the 51st state, then all bets are off. You can throw your prediction book out the window. But I think even right now, very hard to make predictions for
Right.
the balance of this year. We definitely need the dust to settle a little bit here in Canada.
Yeah, I agree. I think that the 51st, I don't know how much you want to dive into
I
the
don't.
51st. I will
Other,
just say that I am actually really proud of all of our Canadian politicians who have all kind of banded together and been saying the same message. We've had Trudeau on CNN. Doug Ford has gone on Fox. The Alberta Premier, Danielle Smith, she's made a similar statement. Stephen Harper, the former prime minister, has come out and said the same thing. So in terms of like a Team Canada, let's put our colors aside of conservative and liberal. They're all coming out and saying the same thing, with the exception of Pierre Poilievre, who's trying to get elected, I guess.
Yeah, I guess my concern with, like, my biggest concern with it is any reaction at all. When that guy goes on Twitter or X, when President Trump goes on X and tweets something ridiculous about a 51st state, I don't think we should really be reacting, which is sort of why I don't even want to touch upon it here, other than in a humorous way. And I guess to my surprise, it was off the cuff a couple of weeks ago when he first mentioned it, and then he doubled down on it just a couple of days ago. And I would have bet that he would have let that one go. But I guess
apparently he's been doing it for months. He's been bringing this up for months. Like, it's not just in the last couple of weeks when we've really heard about it, but like months ago he was saying this.
Yeah, that's what I mean. But to swing back around to it recently, I thought that it was a kind of one and done.
Right.
What
is all this talk about border control if we're going to get rid of the border? That's the
who knows? Like, this is it. This is like the instability of it. Like, economists predict that the U.S. will be, based on Trump's assumed policy, the U.S. the inflation numbers will grow in the U.S. It's going to affect us up here in terms of the strength of our dollar, in terms of our fixed mortgage rates. But again, those are assumptions based on president-elect. He's not sitting yet until 10 days from now. So
I got a question for you. We didn't prep this one, so I'm just going to throw it in there. But so the dollar declining, what's your gauge? And I have an opinion on this, and maybe you let me know if you want to hear mine first. But what do you think what does a lower dollar mean to our mortgage rates?
Take it away, Sean.
Yeah. So I think, like, so if our dollar is going down, it gets more expensive to export our goods. To import our goods. Things get more expensive here in Canada if our dollar isn't as strong, which pushes inflation up, which would mean that our mortgage rates shouldn't come down quite as quickly, and actually is an inflating thing. So a dollar rate, dollar coming down and continuing to go down, if we continue to see a lowering of the dollar, that could force the bond yields to go up, could force more investment into bonds, which then would increase our mortgage rates. What's your? I know I'm springing this on you, but what's your thought on that?
It is sort of a circle back to the stagflation conversation that we had earlier, where you're just stuck with high prices and high interest rates all at the same time. I assume. I mean, this is getting into an economic field that I'm not a expert in. I will definitely put my foot in my mouth on this one, so I'll defer.
All right. Well, let's see what happens. We saw fresh off the press this morning was the employment numbers came out this morning. So, which were better than expected. We saw, instead of 24,000 new jobs, which was what economists were expecting, we saw 91,000 new jobs, and the unemployment rate dipped from 6.8% to 6.7%. Not a huge dip, but it still went down. It was supposed to be flat. What are your thoughts?
I would consider 10 basis points to be flat. It looked like the highest job growth rate was in the public sector. So again, that's a concern if it's just government money paying for more government employees. And it looked like self-employment grew a little bit. So that's good, because I think the strength of our sort of like tertiary economy in Canada is self-employment, right? Number one, I think Well, I think banking is probably a little bit too high. Natural resources in Canada are a big deal, but for self-employment numbers to come up, that's good. But
Yeah, I think
otherwise, I think
that's
this is a non sort of headline.
non-story for you.
It feels that way for me. I don't think it'll impact mortgage rates. I don't think it'll impact interest rates. I think a 10 basis point shift um, until it becomes a trend is just a month.
Yeah, I think you're right on that. I do think that we need further interest rate cuts. But if the Bank of Canada were to point to one number, it would be the 91,000 new jobs, which is what, like three, almost four times as high as what they were expecting, pointing to that, well, maybe the economy isn't as weak as what we had thought. And they did say that they were going to look at the numbers and decide on the interest rate, the further projection of the interest rate at that time. So January 29th, which is the next meeting, if they were to look back and say, well, it's better than we expected, we did a series of 50 basis point cuts, let's pause in January and then let's pick this up again in March. I think that's the number that they point to as like, hey, let's let the US administration come in. Let's let the employment's not as bad as we thought. It's not a burning platform where we need to decrease rates again. And let's see what happens. I do think we get, well, for sure we're getting another 25 basis point cuts, but I think that, you know, more from that. I just don't know if it has to happen in January for us to get there.
That's interesting. I mean, when I look at it, so like what you're potentially saying is it could be a hold on January 29th.
Yeah.
Yeah, and
And I think the current
I would say like that it's 25 basis points almost guaranteed. I don't think that the employment numbers here, and I guess there will be new employment numbers in January. Or sorry, no, um, I think that it still leaves the window open for a 50 basis point cut because most of those jobs came from the public sector, right? So if it was 91,000,
40,000 jobs.
yeah, it was at
Yeah, not quite
40,000.
half, but it's across like 56,000 full-time jobs in a variety of different. It wasn't just one sector. Like we did have transportation, finance. I'm forgetting the other one, but it was across a variety of jobs. So yes, it's some of it is in the public sector, but I still think that's the number that they could. Not to say that they will, but they could point to that number and say, you know what, let's pause this one. Let's keep some of our powder dry. And if we need further rate cuts because there's 25% tariffs come in or there's just a whole bunch of uncertainty in the US, then that allows the Bank of Canada to be in a stronger position where they don't have to like, do a massive rate cut later on or try to catch it up or try to increase it. Like I just think that you keep it where it is. And I think the rates is about 67% last time I looked. Chance 67% chance of a rate cut, 25 basis points, and still 30 something percent for no change. So it's not
Hmm.
that it's a foregone conclusion that we will get a rate cut. And I think this makes those chances of no change better.
So if there's no rate cut, coming back to what we do in our industry, that's really sort of centered around real estate and mortgage starts and origination. Sorry, how do you think if there's a pause in the rate cut? What do you think that does to the real estate market in let's just in the GTA?
I think psychologically, I still think that we've had enough rate cuts for us to have a strong spring market. Um, I don't think that it has a huge change that, hey, we're going to pause one meeting where we've had such a good run of rate cuts. I still think that we get lots of buyers in the market this spring.
Yeah, I think that, I mean, my total outlook for this year is fairly positive. I don't know that we'll have that it'll be explosive as I maybe would have previously projected, but I think that it's steadily gaining momentum over the year. But I think that a pause in the rate cut at the end of this month could prolong the wait until we do get back into a explosive market. I mean, there's a lot of pent up demand, and there's probably a lot of people that were thinking about selling, waited, and they're, if it was an inevitable decision anyway, that's you can only wait so long. So
Yeah.
I think we'll definitely see momentum in the market, but with a pause in the rate cuts right here, it could take a little stumble to get
Yeah.
out of the gate.
So we had 67,000 sales in the Treb market last year in 2024. I mean, certainly there's going to be a few different things that happen. I'm prepared to say that we get over 80,000 transactions or 80,000 units sold of all property types in 2025. I think we do have a bump. I'm going to, if you want to pin me to it, 83,000 is my
Ooh.
official guess. But I think, if you want to give me a range, why don't we do the housing and interest rate ranges of what you think it's going to be at? And
Yeah,
maybe
where do I
you can
think?
give me the low range because they're going to pause and the higher range because they don't pause.
Well, let's say I think I'm a little more timid on my predictions for this year, like maybe 78,000, because I think that the condo market is still going to be lagging. Now, I think that if you're interested in getting into the market, I think that a condo is a great place, because I think in a few years there's going to be tremendous value because nothing's getting built right now,
Mhm.
and we have the we sort of pinched the garden hose on immigration a little bit, but eventually that's gonna become unkinked, and that's gonna open up again, and you're gonna see a lot of value in the condo market, in the investment market. So this year, 78,000. That'll be
78. All
that'll
right.
be my.
I'm 5 ahead of you. I'll say 83.
All right. Well, we're in the same sort of ballpark. I mean, look, I would love to see more than that. Let's get out there and get busy. But there's economic factors at play there as well.
Yeah, and it's nowhere near a high. Like we were up over 100. I think don't quote me on this, but 115,000 I think transaction units sold at one point.
Was
So
that
we're
when the
well
money was
below.
free? When the overnight rate was 25 basis points?
Yeah, so overnight rate is at 3.25%. The prime rate's at 5.45%. You've been pretty vocal on a pretty low overnight rate and prime rate. What's your guess by the end of 2025? Where do we end up?
I'm gonna stick to my guns on this one. Well, the activity I can't completely predict. I would say that overnight rate 2%. I've been saying that from the beginning, which would put the prime rate at 4.2.
All right, I'm going to go a little higher. I'm going to say that we'll be at 2.5% by the end of 2025, which would make the prime rate 0.6%, I think.
Yeah, and so
So
if it
75
takes
basis points off.
if it takes till the end of the year to get to my prediction numbers, that means that in 2026 we'll have restored the same level of mortgage borrowing power that we had sort of from 2017 onward. And so right now we have less borrowing power. Key factor there is the not the overnight rate. We obsess about the overnight rate, but really the overnight rate doesn't affect any sort of impact of our lives. That's really for bankers.
You mean the
Um,
prime rate does?
the prime rate, yeah, and we've been focusing, and it's something I've been noticing on social media a lot, is that we're focusing on the overnight rate, but the overnight rate is just underneath the rate that impacts us, which is the prime rate. So when we think
Right.
of prime minus to get to your variable rate discount or your HELOC or your line of credit interest rate, we really should be focusing on prime rate
Yeah.
100% of the time.
So what would you say? I'll put you on the spot a little bit. What somebody comes up to you and say, "Hey, Vaughan, what interest rate term? What term should I be picking? Is it fixed? Is it variable? Is it 5-year fixed? Is it 3-year fixed? 2-year fixed? What's your call right now?"
Yeah, all of those for sure. That's
You do them all? Give
you
me
know,
one of each.
if it's an insured purchase, right now I'm staring down a nice juicy discount on the prime rate. You know, you get a prime -1, prime -0.85 on the insured side. That's tremendous. On the uninsurable, you know, if the purchase price is over $1 million and you have that 20% down payment, I don't know. You know, I think if you're buying today, maybe it's a shorter term because like what I'm seeing out there for variable rates is like a prime -0.5. If you can get a little bit better of discount than that, I'd be pretty happy. At a prime -0.5, I'm not 100% sold, but could be 100% sold. Well, how like
Yeah.
what's your on the
Yeah, I think
uninsured?
I'm in the same boat.
Yeah,
Yeah,
you got
I
to look
think
at
if
what makes
I'm
sense
looking
for the
at
future.
it
If the prime
depends
rate
on the
goes down to
borrower.
4.2 and you know then you're a sub 4 with your variable, but on the insured side, well then you're like getting close to a 3% interest payment, which over the last 2 years is tremendous.
Yeah, I think that it depends on the borrower, right? I'm leaning more heavily towards 3-year fixed rates than I am towards 5-year fixed rates. Just with the penalty is much higher. Life happens in 5 years. You never know what's going to happen. So I'd rather put somebody into and personally pick a 3-year fixed
Yeah.
rate right now, unless I'm getting mid 3% on a 5-year. That's where I'm probably leaning over to the 5. But we're not expecting that fixed rates are going to drop that dramatically over the next little while.
No, certainly
So,
the short-term forecast is that the fixed rates are kind of like what you're looking at, which is there's some comfort in that too. Like if you're renewing into a fixed rate right now, you're probably not going to wake up in 6 months and all your friends have a better deal than you, right? Because that's the
right.
real, uh, hair-pulling frustration is that when all your friends get a better renewal rate than you, but it's probably not the case, right? So
No.
we can relax a little bit about that, even though you may not relax so much about the extra few $100s a month in mortgage payments.
Yeah. Yeah, I agree. I think that the 3 year is probably if I was nervous about what's going to happen, and the future is cloudy when it comes to the political landscape, at least in both Canada and the US, then maybe I'm doing a 3-year fixed rate. The rates are similar to what you would get in a 5-year, and then you're not locked in for two more years.
Yep.
But there's still a year left on the Trump administration in 3 years, so maybe you are. Who knows what's going to happen in that time frame?
And look, if the variable rate discounts, if you can get sort of prime -0.6 or better, then I think you're in good shape. I've said that we're going to take some massive nosedives in terms of interest rates, and maybe we have, in terms of the Bank of Canada lowering interest rates because we had, consecutive 50 basis point cuts. That's pretty significant. Like a full percentage point over a couple months is that has it
Yeah.
fallen off the cliff yet? As I expected, no. Is it going to be a little more gradual right now? It seems like, but we're sort of one major event from the thing falling off the face of the cliff. Historically, our overnight rate, our prime rate, has been lower than what it is right now. So I think that's where we're going.
All right. Um, we had meant to bring this up earlier, but we're seeing, this was your topic here. Tight rental markets are pushing demand for investment into rental properties. What are you seeing here?
Yeah, so this was an article that I came across, and it was sort of suggesting that based on the tightness of the rental market and less sort of condo development, that we could see investors putting their money into purpose-built rentals. And I think that what's an interesting question for me. It's like, yeah, sure, like we need it, so let's go ahead. If the economics are there for investors, fantastic. Um, is it enough to help with our housing crisis in the GTA? And for that, I would
Right.
say sure, but also I think that there's a very good argument for government built, purpose built rentals for lower income households. So I think that the two of them could go simultaneously with no impact on investors' return. They're going to be
Yeah.
different property types. They're going to be different neighborhoods. Certainly, if you have private money, you can build wherever you want, wherever you think that it's going to give you the best return. Government purpose-built housing is probably not going to be, in the prime most choice places, but we definitely need it. I think that we've had off-screen chats about where I feel like our sort of entry level labor market could go, and I think that we need affordable housing in order to
Mhm.
preserve that labor market that we absolutely need, because AIs aren't going to be pouring your coffees and stuff yet. So
Come on. They will. They're driving our taxis already in California. They'll be pouring our They'll be pouring our coffees in no time. My slight different take on that is that we've made it a lot harder for mom and pop investors, and maybe less profitable for mom and pop investors now, with the changes to the capital gains taxes, with the changes to even like an Airbnb being charged GST on the sale, I don't have that
yeah,
correct, but essentially the CRA has made it more difficult for mom and pop investors in rentals, as well as just short-term rentals for like a business that you're renting. So if we're going to take all of that supply out, and those people are not going to be as interested in buying investment properties anymore, then we need to build some other rental properties. And right now, like, it's dipped. Like the price of average asking price for rents all across Canada has gone down in the last year. It's down to 2,109, but that's still up significantly from where it was 5 years ago.
for sure.
So I think if we're going to take that rental supply out, where we're going to allow anything that was a 1-bedroom condo that was like investor stock is going to now go towards a lot more end user home buyers, then we need to be building other rental properties to backfill that. And yes, we've slowed down inflation, or it's not inflation, slowed down immigration. There'll be less people coming into Canada, but that's not a long-term solution. That's
And
just a short-term
it's not a
blip.
significant slowdown either. It's that, again, that was more of a headline. It was a 20% decrease over the next couple of years, and that was proposed, and I don't know that it's written into policy yet. Because that's also, we've seen that happen a few times, where a government
But
will
it's not like
announce.
conservatives are not going to launch into like high immigration. Like if they get into power, they're not going to come in and we got to ramp up 400,000 a year for immigration.
Well,
They'll
it
take
would
a
be
tighter
stupid if
approach
they
to it.
did, until we can get this housing crisis under control. But I mean, we need the immigration to contribute towards the GDP. So, um,
Yeah.
it's a tight situation. But to add to what you were saying about the mom and pop investors with rental prices, we made it darn near impossible recently for foreign investors to put their money into housing in Canada. And I think that contributes greatly to our condo market and our condo development not being built. If it was built on Hong Kong dollars, which I never had a problem with, and we talked about this early on in the podcast, is I don't, as long as the money is legal, we're not talking about laundered money. As long as it's good money, we need the housing built. So I don't care if it's Canadians funding it or somebody from overseas funding it and then renting it to Canadians. We need the condos built, and with all the legislation against foreign investment, that's going to contribute to the stagnant building that we're seeing now. So a lot of
Yeah.
factors.
I don't know. So if rental prices have decreased over the last year, and the supply of units available for end users to buy has gone up, like, why do we need to open this up to foreign buyers, or to make it easier for more people to invest in single unit properties? and then rent them out. It's not creating rental supply. It's not really creating a rental supply. I'm on board with creating more purpose-built rentals, government investing in more purpose-built rentals, or having a program for builders to build purpose-built rentals. I'm cool with that, but I don't think we need to open it up to end users, to mom and pop investors to put all their retirement nest egg into a one-bedroom condo. And I don't think we need to open it up to foreign buyers to do it. They can still build large scale. We haven't cut off the supply for big investments into builders from taking foreign money, but I don't think we need to invite people from all over the world to buy one bedroom condos and then leave it vacant for the most part, just parking their money there. I think that was the issue that we had.
I don't think
parking
that they
money there.
were vacant for a long time. I mean, there may be some vacancies now, and some of those foreign investors have pulled out, which I think is like also good because it creates opportunities for Canadians to buy it. We're just in the middle of the shift, and so it's
Yeah.
uncomfortable right now. But what it will likely lead to is foreign money built the condo buildings that we needed to be built, and that money's not there right now. The builders are not selling enough units to justify putting a
Nothing's on the
shovel in the ground.
trajectory. You know,
Right.
nothing's in the future too. Like we're not built, there's no future projects coming in. I think it's 3 years. Like there's
That's
hardly
right.
any buildings coming.
I mean, listen to
So
that. That's where the opportunity is in the condo market, and it's going to be Canadians that are going to buy up those units. And right now, they're undesirable. But if you look ahead 3 to 5 years from now, they're going to be very desirable. I think it's a tremendous investment that was created because a bunch of foreign money built the condo buildings, and now it's going to be sold to Canadians. I don't see a downside there.
I think that I do. I think that we're seeing so it'll be Canadians that are purchasing those units, but it'll be end user Canadians that are getting their first property that are buying those units that are for sale right now and seeing the appreciation in that value versus a foreign investor or a mom and pop investor putting their life savings, or the foreign investor putting a small percentage of their income or their assets
Hmm.
into a one bedroom condo in the GTA or the greater Vancouver area, and then seeing that investment grow. It'll be people owning their homes that will see that appreciation, and that's been what Canadians have been wanting. Is that like, oh, I'll never get into the home market? Well, now's your opportunity because prices have gone down, and the opportunity is to see growth in that market as well versus a whole bunch of people that already have money and they can take that, they can keep that. Build purpose-built rentals and then
Yep.
allow first-time home buyers to see appreciation in their home values over the next few years.
Look, I'm very much of the mindset build now, ask questions later. I don't see any scenario where we overbuild, and I understand the concern there would be that if there's too much built, then everybody who owns property is going to lose value on that property. I don't think that there's any scenario that I can think of that probably anybody else can think of that would happen. Let's
Yeah,
just build. We need it. Purpose built
for sure.
rentals, low income rentals, everything. Let's get shovels into the ground.
Yeah, and that's what I'm looking for the next, the Ontario administration, the Canadian administration, the next governments that come in. Let's get more building happening. Let's make it easier to build. And that will be from all levels of government. That will be investment in transportation, in building, in a whole variety of services. And that's what I'm looking for next.
Absolutely.
All right. Well, let's end it there. I think that's our longest podcast that we've done, and we'll see you next week. We'll be recording earlier in the week, and we'll see you next time on the Mortgage People podcast.